Good morning, everyone. Welcome back to the Learning Collective web sessions. I'm Ann Wynn, marketing specialist at Risk Inc. We wanted to be able to share and have these sessions available to all to view and access. And we've got a great of industry leaders sharing their knowledge and wealth of expertise and insights via these sessions. And today I'm really thrilled to have AJ Pangarkar. It took me all day to practice his name yesterday. With us to share how training practitioners can really show the ROI of their training initiatives and programs to business leaders. As you and I think many in our industry agree that training professionals want a seat at the table. We want to be able to show the ROI, but oftentimes we're not really sure how to go about doing that. And I know that's an area that you speak of and present on very often and write on often as well. So I'm going to just read a brief introduction for AJ here, although he probably doesn't need any. And so AJ is a fellow of the Certified Professional Accountant, CPA, and Certified Training and Development Professional, CTDP. AJ, with partner Teresa Kirkwood, has published 3 books. They are available on Amazon. We'll include a link for that as well, with their most recent one titled The Trainer's Balanced Scorecard, a complete resource for linking learning and growth to organizational strategy. And under his leadership, Training Magazine awarded Central Knowledge their Technology in Action Learning Management Project of the Year for success with Apple. He's an award-winning writer, winning the 2014 and 2015 prestigious TrainingIndustry.com Readership and Editors Award. And he develops courses for LinkedIn Learning and regularly guests on Montreal's #1 talk radio show discussing workforce performance issues. So without further ado, we are going to get started with AJ's presentation here. Let me pull it up for you. All right. Take it away, AJ. Thank you.
Great. Thank you, Anne. I appreciate it. And thank you, Risk, for having me here today. We're living under interesting circumstances, and it's a shared world experience. So hopefully you are capitalizing on this time to do some learning and some development for yourself and investing in yourself. And I do appreciate you being here with me today, considering the situation that you may have some other pressing matters on your plate. But hopefully you can contribute to this discussion, and I will go through the slides and be sure to answer any questions or concerns as they come up. Mind you, we do ask you if you can keep all the questions to the end of the presentation. If you do have something that you're not understanding during the session as I go through the slides, please message in the message box, and I'll be able to address it. I know Anne is monitoring that as well, so in the event I'm not in that window, because as you can see, my PowerPoint presentation wasn't broadcasting properly in PowerPoint view, so we are in slide mode right now. And so I will be in the PowerPoint presentation presenting these slides. So again, thank you very much. I'm going to go to PowerPoint right now and look at that. So the title of the session is The Real ROI, How Business Leaders Evaluate Learning Investments. And this is something that is very key. And I want to make clear that what we're going to be talking about today is the real ROI, meaning what your business leaders look at, not what is being proposed in the learning domain or learning industry. So, and I'll get to that in a little more detail as we go through the presentation. Just to give you some resources, if you'd like to follow me, I'd be really happy to follow you back. My Twitter handle is BizLearningDude. And I use it as a learning tool myself. I learn from people, and I try to share resources that you can learn from as well. So please follow me. And of course, if you have anything to contribute to the conversation, I'd be very happy to. And if you like to live tweet, I know Anne is doing that today, please go right ahead. As Anne mentioned, I do a lot of courses for LinkedIn Learning, formerly known as Lynda. The 2 courses that I believe that are very pertinent to this presentation, if you are interested and you do have a license to Lynda or LinkedIn Learning, is my 2 courses, Gaining Buy-in for E-Learning, and of course, Practical Success Metrics for your training program. And if you don't search for the name of the courses, search for my name and you'll find a list of all the courses that I've done. So what I usually start off with is that this is still a learning session, and what I always try to promote is to make sure that you leave here with one thing that you can actually apply in your efforts. Now, the world is very different, and you're going to have to apply it from your home probably at this point. But what I would like you, and I put Monday, and I know today is Wednesday, but I'm going to give you a little latitude. What would you do Monday morning from this session? What is the one thing you want to take away? And either you already know it in your head and you're trying to find the answer through my session, or you're going to go through the session and I hope by the end of it you'll have noted at least one thing. I'm not asking you to conquer the world here. Just take on one thing that you can apply in your professional lives to make your work and your stakeholders see you differently and improve the organization. So please make that effort. And then if you have any questions later on and post the webinar, please reach out to me and I'll be happy to answer any of your questions. Now I'm going to pose a question here, and you can contribute in the chat if you like. And I'll pause for just a couple of seconds because I'm not knowing how many people are on the webinar right now. But I'm going to ask you questions like, what do these three things have in common? And they're random, but if you look at them, there's the Post-it notes, there's the Q-tips, and of course, there's the famous specialty coffees, and I put Starbucks because that's the one that's we're most associated with. The question is, what do these things have in common? And unfortunately, that this is animated, I'm giving you the answer right off the bat. They are learning events that deliver business results. Now think about it for a second. All of these products are innovative on their own. We all sort of know the stories behind all of these products. And I won't go through in too deep detail about the ideas, but we can safely say that they are innovative for the moment that they were created and brought into market. And innovation doesn't happen by accident. Innovation requires some structure, it requires some systematic process. And more importantly, it does require learning. It requires offering knowledge to people that they can apply and think and become creative. Now, I know I'm talking about innovation and creativity, but what it speaks to is about how we need to leverage learning to drive business outcomes. And these are very visible examples of that, but they don't have to be that visible. It only means that you need to make sure that the knowledge that you put into people's heads is actually deliver some output or some value. And that's really what we're going to talk about today, because if we want to talk about ROI and learning, we have to talk about the outcomes of what we deliver to the business. And so I hope to sort of clarify this in both two contexts. One is on a quantitative, or rather than say quantitative, I would like to say financial perspective of how your business leaders look at learning and how they expect, what do they expect from learning as in terms of financial outcomes. And second, of course, what is more important to business leaders from learning is the qualitative aspects, because as Anne mentioned, I am a CPA. And I'll just share with you right now that, and it's not an insult, learning is a cost center, and that's not a bad thing, and that's not an insult to any of us. It just means cost centers are meant to deliver not profitable results, but rather qualitative, measurable qualitative results at the end of it. And we'll get into that a little at the end of the presentation. So a couple of things we're going to cover today is, of course, how leaders see training. We have to understand the fundamentals. Let me back up a step here. I'm speaking too fast, but we have to understand the fundamentals. So how do your leaders see training? How do they perceive it from their perspective? We have to understand the way they look at us. Second, we're going to look at what do they mean from the word investment. Again, it's from their perspective. We have to understand what they're thinking about, not what we're interpreting, what they actually are, and what they actually are saying. And then we're going to look at how to evaluate the financial impact, as I mentioned before, and then the qualitative output that they expect from learning. So the question I'm going to ask you, and you can reflect or you can type in the chat, and I'll double check there, is how do your leaders see training? And I'll give you a hint. They look at it in three ways. And I'm being generalistic and I'm being broad in my description here, but you can bucket them into three categories if you wish. And this is the three ways they look at it. Now I'm going to pause for a second to see if you have any guesses of how they look at that. And I'm just going to check the chat to make sure that I'm not missing any comments. And so if you want to think about it in three ways, let me share with you what they are. The first one is, of course, what we call expected or necessary training. Expected or necessary training is basically things like compliance or onboarding, meaning that your leaders expect to give you money to get people up to speed on whatever it is, whether they have to be compliant about something or they're starting a new job or starting a new role. These are budgets that are set into place, and they expect you to use it to make sure those people provide that output. Now, expected and necessary training is rarely questioned, meaning that they've given you money, they expect an output, the correlation is there, and that's the first way they look at it. The second way they look at training is the impact within major investments. Now, we're getting a little more tricky here. Okay, so think of it this way: if your company is launching a new product or a service, or making a major purchase, for example, buying a new building or building a new building or facilities, these are major investments that companies have to make. And within those major investments, they have outlined all of the what we call cash inflows and cash outflows that are going to be expected to be associated with this event. And one of those cash outflows, I said it on purpose because part of buying or building new product is the inflows, and that's basically the revenues from the product itself. But the outflows is what are the costs that go into it. And one of those costs is training. And I use the word training on purpose because that's the way your leaders see you. Is they don't see learning, they see training. And so training is a cash outflow. And so you are a component within this major investment, and you have to understand your role within that context. And so that's a very important one that we have to speak to, because we're going to speak about this again when I talk about the financial impact, but they are going to be pushing all the costs to the minimum level that cannot undermine the value or the output of that product or the purchase. What I mean by that is, think of it this way. When Apple launched the iPhone in 2007, prior to that, they were planning it, and of course, they had training in that line item. They had a lot of other things in the cash outflow, of course, like marketing and other support system like IT. But one of the line items, of course, that was a cash outflow was training. And so I'm sure the senior leadership team at the time, led probably by Steve Jobs, asked training, hey, what's the lowest amount that we can go without undermining the quality of putting this product out on the market? Meaning, make sure the customers understand the product, make sure that our support systems understand the product and are able to support it. And so they're not asking you to cut budgets here. They're asking you to reduce it to the point that is valid. So they're looking at the must-haves and the wishes that they want from it. And the reason they're doing this is because ultimately in a project or a purchase, they're looking to maximize their return on investment on that major investment. Anyways, I'm going down the rabbit hole here, but it's just to show you there's a bit of the complexity that it's not just straightforward when it comes to these kind of things. And these are the real ROI things that I'm going to be speaking about. And the last one, of course, is more targeted to us. Well, when I say us, to a cost center role within the organization, and that is investing in major or tangible training requirements. So this happens a lot. I get calls either from leaders of learning departments or operations. And the question comes up, hey, we need to buy a new LMS, or we need to buy tablets or more laptops or whatever it may be. And these become investments for the organization. And I said the words investments. And so when we are talking about these major learning investments, tangible learning investments, not the training itself, the actual learning investment when it comes to technology or hardware or items like that, we have to account for it in the terms of an ROI that they look at, not the ROIs that we calculate. And we'll talk about that in just a few minutes. I'll pause for a second to let you absorb all of that, because I just threw a lot at you, but generally these are the three ways your business stakeholders look at training. Now what I like to do a bit, because my background is in, of course, as a CPA in accounting and finance. I do have a training and background as well, but I like to balance things between performance and financial outcomes. And I decided that let's look at how your leaders look at these three elements, the way they look at training, and how do they compare in terms of what are they expecting out of it? Is it a financial output or proving a financial result, or is it proving a performance outcome or performance result? And they're related, but you have to look at it the way they look at it. So the first thing, let's get expected necessary training. As I mentioned before, they're giving you the money. So there's no much argument here. They give you the money to get skilled people up. So what they really are telling you is that, hey, we gave you the money. We're not expecting a financial output. We're just expecting people to know what they're doing, right? Think about your first job. Hopefully they give you proper training, and that within the month or 2 months, whatever length of time, the complexity of the training to get you up to speed, that you were able to do the job effectively. That's performance. And so when you talk about expected necessary training, there's no real ROI. The only ROI in that one is basically, if we want to talk about it, not in a literal sense, but in a figurative sense, is make sure those people know either what they need to know to do their job effectively and do it well. And so that's what they're looking for. They're not going to ask you, hey, did the training for training, Bob or Mary pay itself back? They're not going to ask you that question because they've already allocated the money to do what they need to do. That's an easy one. The second one is impact within major investments. Now, again, as I mentioned, this gets a little tricky because there is a financial component because, as I mentioned, they're balancing cash inflows from the revenues they're making from the project or the investment they're making within that major investment. And there's cash outflows that has to support it. And so, again, you're one of the cash outflows. So they are looking at drawing down, they're looking at maximizing the return on investment of the overall investment itself, the new product, the new purchase, whatever it may be. They're trying to maximize the return on investment of that. In a literal sense, they're actually trying to measure the ROI. And so they're not looking at performance learning, but I put a little star, a little asterisk there, because even as I mentioned before, even though they're not pushing you they're not really looking at performance, they also do not want to undermine the value that you're delivering to the project. Meaning that they're going to say to you, hey, can you reduce the cost of that kind of training on these products? And you could say yes or no. If you say yes and without questioning them why, then you might be potentially undermining the outcome of that overall investment. So they recognize the value you're offering, and they're expecting you to push back to say, hey, no, we are at the minimum level. If you go any lower than this and you cut our budget, we're not going to be able to deliver, making our internal support staff able to support this product or our customers to be able to understand this product. So be able to push back and say, no, we are at a minimum, and they'll back away, but make sure you substantiate your reasoning. You just don't say, no, we can't. Support your reasoning, because if you have some latitude to help them improve the overall return on investment for the major investment, they will want to see that. And by the way, don't take this personally, because they're coming to you to ask you to reduce your training costs. That's not personal. They are going to marketing, they are going to the finance, they're going to IT with the same questions related to their areas. So all they're really trying to do is maximize the return on investment of their major investment. The return on investment of their major investment. Little tongue twister there. And finally, the major tangible training requirements. Here it gets, again, these are two things here. They're going to expect a financial accountability for it, meaning if you decide to buy that LMS or those hundreds or thousands of tablets that you need to spread across the staff, or, or whatever, the software that you need to build the e-learning courses, they are going to expect some financial accountability here, because these are tangible elements to the organization. And I'm going to get into accounting speak, so please don't get intimidated or scared here. But basically in accounting, especially on the balance sheet, you have to account for what we call capital assets. And capital assets are what we call property, plant, and equipment. So your equipment, your LMS, is part of that. And those items have to be what we call capitalized over the life of that asset. And that has to be accounted in the accounting world. And so that is the financial role. Now, I'm not asking you to become accountants. I'm not asking you to become financial experts. I'm asking you to talk to your financial departments who are handling this thing, so you understand how to manage this when you're building a business case to argue the fact that you need an LMS. Because even though you're accounting for it on a financial side, there's a direct correlation to the performance. So your leaders are going to come back to you and say, okay, fine, we can buy the fact that, this is a capital investment. But if we're going to put a capital investment in an organization, it has to drive value for the organization. What is your LMS going to do for us? And what I'm really asking you is that, is it going to improve performance some way? Meaning, Are employees going to be learning more effectively, or will they be able to track their performance themselves? Whatever that LMS or those tools that you're bringing in has to show some performance value to be able to justify the cost that they're going to keep it as a long-term asset within the organization. I hope that was not too much, but I mean, you see, when people talk to me about training ROI, I get it. My hairs on my back go up, only because I know that's not the full story. And of course, training ROI are not valid calculations in the eyes of business leaders. So the term ROI is a lot more complex within organizations than what people who are propagating the term training ROI within our space. So be careful, be critically minded when you hear people talk about that in training. And by the way, a full disclosure, none of what I'm talking about is my methodology. I don't have a methodology. The methodologies I come across are taken from the business and financial and accounting textbooks. So if you want to validate or check up on me, please do so. Open any textbook and you'll see what I'm talking about here. And these, by the way, are the same textbooks your business leaders have learned from formally and are formally educated in. So be sure not to undermine your credibility by showing them something that they don't understand. Show them things that they're actually using. As you can see, I get a little passionate about this stuff, and I get passionate because I want you all to be very credible in what you do and offering to build a business case for learning. So let's step it up a little further. How do your leaders refer to investments? I sort of gave it away so far, but if anybody, let me ask personally, how do your leaders see investments? Do you know? Can you speak to that or put it in the chat box? And let me just check the chat box while I'm here. Okay. Well, seeing that, I always said I'm a teacher too in university, and I always tell my students that if there's no questions or comments, then I'm a fantastic instructor. And by the way, that's meant to be funny and a little bit self-deprecating. So please don't take it any other way. So let me go back to the PowerPoint. So how do leaders see investments? Let's take a look at that. So as I defined before, investments for your business leaders, again, open any textbook on this definition. And I took this from Investopedia, so you can Google that as well. But investment is an asset or item that is acquired with the goal of generating income or appreciation, meaning it has to add some value and it's got to be tangible in some form. So when people in training talk about training itself, meaning the activity of training itself and putting knowledge in people's heads as an investment, you're already starting from a disadvantage because it is not. And again, it's in the figurative sense, it is investment in people. I get it. But in a literal sense, it is not an investment. On a literal sense, it's actually a line expense, because an investment has to prove long-term value over time, meaning that it's got to be the tangible asset has to correlate to the value that is driving for the organization over time. This is an accounting speak, of course, but what I'm trying to say is that, can you say that whatever you trained in somebody, let's say 3 years ago, let's say you did a training course 3 years ago, and those people are actually applying their skills today, and you can show that they're applying the skills from the training, that's a causal relationship, meaning there's no tangible evidence that your training actually changed that knowledge. Now, a lot of you are probably screaming at your screen right now saying, yeah, but my training did that. Yes. However, just like marketing, I would say marketing as far as television ads and those kind of stuff, we can't make the direct correlation that that training actually is that skill, meaning there's no direct linkages to show that as an investment. It happened in a point in time. It's contributing to the value organization 3 years later, but there's no direct correlation. I know this is hard to wrap people's mind around, but it's very important that you do, because if you do that, you're painting yourself in a corner saying that you are taking credit for all of that. And if it doesn't work, you better be prepared to take credit when it doesn't work fully. So what I'm trying to say here is that, yes, your leaders are not stupid. They recognize that if you put training into their heads last month or last year or 3 years ago, and people are using it now, they recognize the value of training that delivered to the organization, but you can't make the direct correlation. And the same example I use is like, next time you watch TV tonight, for example, and you see an advertisement for laundry detergent or a hamburger at McDonald's, you didn't jump out of your chair to go right to the store to buy that product. But maybe in a week from now, when you're running out of supplies and you're at Walmart, or you're ordering online from Walmart in this case, you come across the detergent like Tide, or whatever, or you're hungry next day for some food and you go buy the McDonald's hamburger. Chances are it's because that ad has been ingrained in your head and has made you buy that. However, can you prove it? That's the question. So you have to ask yourself, does the training do this for you? So be very, very careful. So again, as I mentioned before, your leaders see you as a cost center, and this is not I always tell people in an amusing sense that cost is a 4-letter word, but it's not meant to be a bad 4-letter word. You have to recognize that your leaders are formally educated to recognize investments in different ways. And there are different centers within an organization. There are profit centers, which we are not. Don't let any training ROI person say that to you, because that's a lie. We are a cost center, just like marketing, just like IT, and by the way, just like your finance or accounting departments. They're all cost centers. They're support functions. And as support functions, the cost is meant to drive value. Think of a nonprofit organization. They're not profit driven. They have to deliver value to its members. So they don't have to show a report on profit. They have to show how to use the money to deliver value. And that's what you need to do as well. So think of yourself as a nonprofit organization delivering value to your customers, is the way I like to look at it. So for leaders, if I can summarize, learning is never about return on investment. It's about meeting performance expectations. And that's very, very important, because if you're a cost center, you're about delivering value and improving the outcomes of performance of different areas within the organization. So keep that in mind. I always say expectation. I know people say it's Ajay, it's semantics. You're getting too uptight about the term return on investment. No, I'm not, because if you're talking to business leaders, you have to remember, just like you, when I talk to you about anything in training, your mind will go automatically to those literal terms and how you were educated in it. Same way with business leaders. They were formally educated to understand ROI in a literal sense. And if you want to look it up, it's called the DuPont method of return on investment. And from that DuPont method many, many years ago, many iterations and variations of how to calculate return on investment has popped up, which I'll show you in just a second. But it's a literal sense. And because, and I'll say this with all affection to my business colleagues, we are brainwashed to think of it that way. Even when people talk to me about return on investment, my mind automatically switches in a different context about how to calculate and what that means. So be careful the terms that you use. If you want to speak the language, you need to make sure you speak in the same language as your leaders understand, not something that you're interpreting it as. Okay? So let's go a little deeper. So if you guys are with me so far, and I'm hopefully doing a good enough job that you guys are sticking with me and I didn't scare anybody away, let's look at how leaders evaluate projects. Now, I'm going to take you to a simple example, but before I get there, let me just share some simple methodologies that they use to measure return on investment. Excuse me. So keep in mind, when they evaluate learning, we look at, so all of you have recognized the Kirkpatrick 4 levels of evaluation, and I'm going to try to correlate that to what business leaders are looking. And by the way, as a side note, never go up to your business leaders talking about Kirkpatrick's 4-level evaluation. They will not understand you, and nor should they. That's your expertise. That should not be their expertise. So, but speak to them in terms that they understand and interpret Kirkpatrick in that way. So let's look at this. So first one is learning elements. That's our wheelhouse, right? That's what we are hired to do. We are, the learning experts. We come in and that's our subject expertise. We do things like needs identification and learning retention to make sure people are actually acquiring that information that we are disseminating and making sure that they know. And of course, that's level 1, level 2. Got that? Okay, that's our wheelhouse. But then where we get a little lost is in the level 3 and 4, right? We talk about the infrastructure, as I mentioned before, the support system within learning, so the capital investments and the operational expenses to support that learning within the organization. And of course, more importantly, what management expects from it. Meaning, is the skills that we're shoving in people's heads actually helping us or helping employees achieve business objectives and operational activities? And what you need to do is work backwards. I've had this, I'm pleased to say, and I'll name drop, I had conversations with Donald Kirkpatrick a few times, and proud to have had this conversation. I can't call him friend, but happy to call, had those conversations. And I did say to him once, I said, the simplicity you made out of the 4 levels is fantastic. However, if I may be so bold to say, is that rather than going from 1 to 4, maybe we should go from 4 to 1. And again, as I always say, as Stephen Covey once said, begin with the end in mind. If you're going to design learning solution, begin with level 4. Understand the business need. And that way, your learning solution will be aligned to that need. Anyways, I'm going off track, but it just gives you an understanding of how to look at these tools and what your business leaders are looking at, because they don't concern themselves with the learning elements. They trust you to do that. What they trust you to do is, of course, connect into the other 2 items that they're concerned about. Because at the end of the day, learning is not important to them. And I say that not lightly. They do believe learning is important, but it's not the end. Learning is the vehicle to get them to their objectives, and you have to keep that in mind. So I'm going to just share with you, there's many other return on investment tools that business leaders use. And if you like to, if you have a case of insomnia and you want to pick up the latest management accounting textbook, please go into those chapters and you can read up on all of the methodologies. But I'm going to share with you some of the 2 most common ones that are used quite frequently within organizations. And one I'm going to use the exercise on is on cost, volume, profit. And the second one that I'm not going to do with you today is net present value, which I'll speak to you just briefly about. So before I get into cost, volume, profit, net present value is basically that. Don't get intimidated. When your business leaders talk about net present value or NPV and they start tossing this jargon around, let's keep it simple. Look at the terms, net present value. Now, I'm going to drop the word net for a second. Basically, present value, share this example. Do you remember when let's say your grandparents or your parents said to you, $1 in my day, bought a lot more than it did today? Well, they're actually doing a present value, right? They're actually valuing $1 that was worth, 10, 20, 30, 40, 50, 60 years ago to today. And naturally, that dollar 60 years ago, let's say, is not worth what it is today. It's decreased in value. And we're looking at today's value, the present value. And so your organizations do the same thing with their cash flows. So remember I mentioned that they take a major investment and they have cash flows and they have incoming cash flows. Usually that is the revenue earned from the project or the product that they're launching. And they have cash outflows, meaning all the cash outflows that has to go up to that point. Now go back to the Apple iPhone example. We saw it come out in 2007, but what people fail to realize, the average layperson out there fail to realize that this was about 2 or 3 years in the works, right? And for at least 2 or 3 years before that, there were a lot of cash outflows. There was a lot of investment in infrastructure, innovation, training, IT infrastructure. There was a lot of cash going out the door for Apple for them to be able to launch a product even before it started making money from it. And so what we do is basically simple like this. They take all the cash outflows for the life of that product. So if they estimated that the iPhone is going to last 10, 15, 20 years life cycle, they've estimated that life cycle and say over that period of time and all the money that we put into it, the cash outflows, and they have all these revenue coming in from it, and they take the revenue coming in from it, subtract it from what they've spent on it over time, and they get a number. And the net part comes like this. At that number, at the year 10 or 20, whatever the lifespan they say, they take that number at the end, and they discount it to today to see what value it is. And that proves their return on investment, meaning that if it's still profitable in today's dollars compared to 20 years from now, it's positive, we call it, then the return on investment is good on the project. If that discounted amount it looks positive in the future, but they discount today and it's negative, meaning at a certain rate that they discounted at, then it's negative and they don't go ahead with the project. But I'm just sharing this with you because I don't need you to become net present value experts. I just need you to be, literate and understanding when these terms come up, especially when you're sitting in a project or product meeting at the table and they're asking your opinion about, what can we do with costs and training. You need to sort of understand where they're coming from. So anyways, I'm not going to do that example here. Maybe one day I could do that for Risk down the road. We can do a live example. I'm putting a bit of a seed in Anne's head. And I hope she's grinning right now. But yeah, this gets a little complicated, but I just need you to understand where that's coming from. And if you have any questions and you didn't explain myself properly, please, ask me at the end of this presentation, or, just send me a note on Twitter or, privately direct message me. I'll be happy to answer you on that. But let's go to cost, volume, profit. This is the fun one, because we talk about, basically, most people know it as break-even analysis. So let me take you through that example right now. So, and it's best shown through an example. So we call this in accounting and management accounting, we call it behavioral costing. And unlike what you see traditionally when you look at financial statements, when you buy, when you look at an annual report of a company and you see their financial statements, we call that absorption costing. That's the reporting side. But internally, companies don't use that to evaluate how their costs behave and how are they breaking even. They separate the costs between what we call variable cost and fixed cost. Now, basically all you need to know here is that learning typically is a fixed cost, meaning that if you're going to say we want to build an e-learning course, you're investing a significant amount of money, between software and design and putting a course out there, infrastructure, to just get the course out. So that is seen as a fixed cost because that cost is not going anywhere. And you better hope that you can make that fixed cost work for the company. So if you're going to propose more fixed cost in the organization, you need to make sure that either the organization will see some benefit out of it, meaning increased revenue in this case, or in the example I'm going to use to you, or see some increased savings or efficiencies or something that's going to offset the cost, or reduce the variable cost, which is, again, going back to the efficiencies and savings and stuff like that. But something's got to balance. It's like an ecosystem. If you increase the cost in one area, something else has got to give. And so when you start proposing these e-learning investments that you're talking about that you think is going to make a brighter future for the organization, you better prove that brighter future for the organization, because the teeter-totter has to remain balanced. Okay, and we'll show an example. So, whoops, I'm sorry. Let me go here. So I'm going to use an example, a very simple example. So it's a company, BSI. They sell a software. It's an accounting software, go figure. And they sell 4,000 units a year. And they sell these softwares at $200 a piece. Okay, so that's their revenue, 4,000 times $200. For each unit that they have to build, so the selling price is $200. It costs them $120 to make each software. So basically, you can do the math very quickly, and they're making approximately about $80 per unit when you subtract the variable cost. The current fixed cost right now within the organization is $200,000. Now, they've upgraded. The hint here is that they've upgraded the software, and there's a new version out after 3 or 4 years in their cycle, and they want to put that out there, and they're going to put this new version out. And you've come up with an idea that, and by the way, they want to continue selling your software to businesses, and they don't want to take their salespeople off the road. They want to continue, getting the sales going for the software. So you came up with a great idea and say, hey, let's build a an e-learning course that will help people learn immediately when they need it, where they need it, which sounds like a great idea, right? And you propose, or maybe they propose, that the total cost of the e-learning software in the course will cost $60,000. And after putting this course out, you expect to see a 700 unit increase in sales. Okay. Now the question is, should we spend the $60,000 for e-learning? And let me ask you that question. Let me look at the chat very quickly if anybody's going to answer it. Who has the courage? Would you propose spending the $60 for e-learning? Okay, nobody's courageous enough to answer, but first instinct is most learning practitioners, and this is of no ignorance to themselves, would say, yes, let's do it, e-learning, $60,000, 700 units, let's do it. Well, we have to do a little bit of math here. So let's go through the math, and this is what your business leaders are doing. And again, this is a simple example. So on the left column, the first column is they're selling 4,000 units right now with no e-learning, okay? And the second column is with the increase when you put the e-learning course in and you put the increase in sales at 4,700 units. Now we can see revenues is $800,000 with no e-learning. With the e-learning, your sales go up to $940,000. So of course you increase $140,000 in revenues. Great job. So there's a case you can say, hey, look, we increased revenues. Now let's continue. Your variable costs, of course, go up because you're increasing the number of units by 700 units. So now we're up to a variable cost of $84,000 over what we originally had. These are incremental increases. And then finally, so our contribution margin is our profitability based on those two elements. And we have a $56,000 incremental increase in profitability, which also looks very positive, right? However, our fixed costs, because remember, learning and e-learning is a fixed cost, went up $60,000. And so automatically, as you can see, the company has lost $4,000 in the first year by putting e-learning in. Now, this is where you get language like this. Your business leaders do this calculation, they come back to you and says, you know, with e-learning, we're losing money. Theoretically, they're correct, because they could do nothing and save that $4,000 and make the same amount of net profit or operating income without doing anything, without investing in your e-learning, right? So you need to build a business case around it. Now, this is a one-year case, right? And remember I said at the beginning that this is the financial aspect, and this is where people get, you know, learning practitioners get discouraged, dismayed, and they walk away and they say, you know, our business leaders don't understand us, and on and on and on. They don't recognize that e-learning is good and we help them increase sales. How can they say we're losing money? And you have to understand your business leaders are looking at the bottom line. They have a fiscal responsibility. So in this case, we're losing $4,000, but you know, we have to ask ourselves two questions. Well, at what point will we break even? Meaning that, is it 4,750? Meaning if we increase the sales by 750, I believe it's 750 units, that will make us break even, which means that they won't be losing any money. And so if you're not losing money at a certain point, then they will say, okay, fine, but still, even at break even, we might as well do nothing and not incur the heartache and putting all this money into it. So you have to be a little higher than break even. Or you have to figure out that, you know, something has to give in here for people to be able to balance this out to make sure they're not losing the $4,000. But these are the kind of conversations that you need to have, and you can't be afraid to have with your business leaders. Now, this is 1 year, and you might say, let's extrapolate this out in 2 years. When is the next upgrade of this software? Is it 2 or 3 years from now? Okay, so for 2 or 3 years, this e-learning is going to be good. So chances are over time, we are going to recoup that loss in $4,000 and build it up further. So these are a lot of things, that dynamics that happen. But this is the financial side, right? So this is the one element that we always get stuck on. When I say we, I'm talking about learning practitioners. Let's look at the qualitative sense, right? Let's look at what do leaders expect. They want business impact. They want, you know, those leaders at BSI want your e-learning to work. You know, they don't want to discourage you, but you know, they're not going to lose money over it. So how do we do this? So let's look further here. So I came up with an acronym because we looked at the financial side. We need to look at the performance side. And so before we get into some performance elements and asking we have to understand some of the key questions they may ask. Now, they'll ask you a lot of questions, and I put it into an acronym I call RADAR. I always say, get your learning on your leader's radar. And what it does for me, it keeps me in mind the key questions that I know they're going to ask. So for example, the first thing is RADAR is you want, and you'll see an arrow next to each of these letters, and it's either up or down. So the first R is you want to decrease resistance. Automatically, you saw in that financial statement, you're going to get a lot of resistance. So the first question is they're going to ask you, what is it going to cost us? Well, $60,000. Okay. But then that's the first one, right? They're talking about level 3 and 4. But then you need to go to the apathy. Now, the apathy is partly our fault, meaning over time, we have never really proved that learning actually made a difference. We just sort of went on our way and put learning programs into play. So they're a little apathetic with training. And they're not sure that you're actually going to deliver a result that you expect. So this is where you need to build your business case. As I mentioned before, maybe we want to extrapolate this over 2 or 3 years. Maybe we want to look at how having a better skilled workforce will make the people on the front lines, either customer service or salespeople, better at what they do in explaining the software. And maybe sales will go higher than we expected. Maybe we're too conservative. But you have to build a case around to make sure that it's making a business impact. Of course, the D is you want to reduce disruptions, meaning you want to, and interruptions in the workflow. E-learning is a perfect tool, but it can't be, you know, take whatever course you develop and slap it into a PowerPoint presentation and hopefully people learn from it. E-learning has got to minimize the impact of disrupting the workflow. Your leaders understand people need learning and they need to learn, especially in this day and age. You are one of the most important topics on your business leaders' minds. but they also do not want you to interrupt the workflow because it interrupts productivity and profitability of the organization. So you have to give them an argument why now. I'm publishing an article for TD magazine for ATD coming up that speaks to a topic that I developed called lean learning, and it speaks to capitalizing on times like downtimes, downtime cycles within organizations where there's slower periods that you can capitalize to put your training in. Or if there's very little downtime, then make sure you integrate your, we'll call it e-learning solution, into the workflow so people can access it when they need it, where they need it, how they need it, and they can apply it immediately. We have the tools. Let's use them. And of course, you want to increase application. We're speaking to level 3 here, right? We're looking at how do we get people to apply the skills that we actually use. So it does make a difference. People learn to apply something. They don't learn for the sake of learning. Think of the next time you're building something around your house. I just built a deck last summer in my house, and I went on YouTube and I looked at all the experts, and I learned how to build a deck. But I didn't sit there to learn it because I wanted to learn how to build a deck. I learned how to build a deck because I had to build a deck. And at the day I built a deck, and the learning benefited me. So I showed a level 3 and a level 4 impact for my personal self. Okay, that's what that learning did for me. And finally, we want to show results, right? We want to increase results. How does it impact the business? Going back to our financial example, can we show the increase in sales over time? Can we show the drive to efficiency within the organization? Maybe you're trying to reduce defects on production lines, and you want to show that they're at a 10% defect rate, and by reducing it 1 or 2%, the defects on production, you show a significant savings. These are opportunities for you to actually show results for the business. It doesn't have to be always, a clear financial outcome, but you can tie in your results, your performance to a financial outcome within the organization. So at the end of the day, you are a cost center and you have to show a benefit, and that benefit comes through performance. Simple. I speak to this in my book, The Trainer's Balance Scorecard, which I am very proud of because that was endorsed by Dr. David Norton, the co-founder of the Balance Scorecard. And if you want to learn, I'm a little bit of a commercial, full disclosure, but if you want to learn something about how to tie training and learning within the organization to performance, I highly recommend that book and anything that Kaplan and Norton has written as well. Because in the Balance Scorecard and the performance framework that your leaders set up, learning plays a significant role. It's actually one of the 4 primary activities within the performance framework. So please know that you are valued, you are necessary, and your business leaders expect you to step up. But understand why they need you to step up is the key here. And it's always to improve performance of the organization, period. So we did a lot of stuff today within a short period of time. I didn't expect to make people completely fluent in any of this, and I hope you don't leave here thinking that you're going to be fluent, but I hope you did pick up some aspects and were literate in some areas. And just to very quickly review, so first, I keep repeating, position training as leaders see it. So we talked about the 3 ways, right, of how they look at training. Understand the way they're coming at you, and this is all about how they're looking at training at the output of the organization, meaning the business results, level 4. Define your learning investments clearly, meaning appreciate that your learning is a cost center. And that as a cost center, and I understand centers, you see it's incorrectly written there. It's not a mistake. I'm from Canada, so we put the R before E on center. But understand that as a cost center, you have a role to play. Cost is not a bad word. Cost is a way they look at how your performance should take place within the organization, and that is to drive value, not financial profitability. Use the existing financial ROI tools to help improve that. Again, it speaks to level 3, level 4. Responds to your leadership's concern. I gave you an acronym called RADAR that I use to remind myself of what they're going to ask me. Mind you, there'll be other questions naturally, but at least you'll have the major ones, understand where they're coming from. So that's always their preoccupation, so understand that. And finally, leverage existing processes. So understand the cost-benefit relationships that are happening within the organizations. Understand what's happening in the processes for you to interject and be able to make them better. Okay, so get people to apply these skills. That's the real value that you're offering within the organization. And if you get them to apply, of course, you're going to improve performance, which speaks to the level 4 aspect as well. So on that note, I asked you a question at the beginning: what will you do Monday? And I hope that you are able to take away one item from here that will help you improve your performance in building a business case for your learning initiative. And I said learning, not e-learning, because learning is the broader scope here. Learning is the area that they expect you to bring to the organization. Your e-learning is one tool to help you do that. So think about what I've talked about here, and if you have any questions or concerns or get stuck, do not sit there and keep wondering what you need to do next. Reach out. Either ask your colleagues or DM me and ask me the question. I'll be willing to help you work through that challenge that you have. So as I mentioned at the beginning, there's some resources. There's my book, The Trainer's Balanced Scorecard, which I mentioned earlier, that's available at Amazon, as well as my other books. And of course, the courses at LinkedIn Learning that you can access. I have many courses there, but the first two are the ones that probably speak to this session directly. And of course, if you need additional resources, I write a lot and they're all free. So with Training Magazine, the one that I really love writing for is elearningindustry.com. I've written for them 3 years. I write a monthly article, and you can go to elearningindustry.com, search for my name, and you'll find all my articles there. And you'll probably see a lot more passion, a lot more depth than I'm talking about here about these topics. And please watch for 2 feature articles coming out, one from trainingmagazine.com in July, I believe, and one from TD Magazine at ATD, talking about lean learning. And on that note, please join me to start a revolution, and let's make learning play that role that is expected to play with business leaders. And that's my contact information. I want to thank you for joining me today in this very unusual world we're living in. And I want to really thank RISC for inviting me to speak on behalf of their organization. They're a great organization, and you should look more into what they do and how they do it, because they offer a lot of value as well. Thank you, RISC, and thank you, Anne. I'll hand it back over to you.
Thank you very much, AJ. That was a very informative presentation. And often, again, sometimes as trainers and training practitioners and learning practitioners, we don't really fully get all the business concepts. And I think you explained it very well. So thank you so much for joining us today. Let's start a workforce revolution, I should say, right? And for those who have not connected with AJ, please do so. On Twitter, he is the Biz Learning Dude. We included that link, and then Duncan has included a link to your latest book on Amazon as well. So we highly encourage everyone to please connect with AJ. He's very active on Twitter and sharing information and other valuable assets and resources. So connect with him today. And again, thank you for joining us for this session. If there are any questions as you're watching the replay, feel free to pop it into the comments. We'll make sure AJ gets it and gets back with you. So thank you again very much to AJ as well for your generous time today and sharing all this information.
Well, thank you, Anne. And I just encourage everybody to be safe, stay healthy, follow the rules. That's all we need to do, and we'll make the world a better place.
Yes, stay home and wash hands, right?
Absolutely.
And we'll hopefully see everyone soon in real life.
Absolutely. Thank you.
Thank you. Bye-bye.